Today, we're going to have an interesting little exercise for you. My name is Steve Didier. I am the Auvoria Prime Resident Credit Expert. And this today is going to be a mini breakdown of my 5-day Boost Your Credit Challenge. So before we get into that, my name is Steve Didier. And like I said, I'm the credit expert here at Auvoria Prime. My background, actually, professionally, after the military, came in real estate. So I had a very good familiarization with credit from doing real estate and mortgages throughout the early 2000s. I got licensed in 2000 and ended up moving out of real estate in 2013. Actually got wiped out hard in 2008, 2009. My credit got absolutely messed up in every way possible. I am an overachiever, so anything negative possible that you can fit on one credit report, I had it. And after that experience, I stayed in real estate for a little bit, but it was a very, very tough market. And I really didn't have the heart to continue with it. I was kind of in a funk and a depression from having been wiped out financially and also going through a divorce. So after I wallowed in my own self-pity for a while, I decided to get off my ass and get back and become a productive member of society. One of the first steps to be doing that was fixing my credit. So during the process of fixing my credit, I also met a guy who owned a credit repair agency and learned some of the finer points of credit from him, and have been doing credit repair and restoration ever since. So that is my game, whether it's personal credit, repair and consulting, or business credit. That is what I do. Been doing it for a good 6 years now. And today, like I mentioned, we're going to do something a little bit special. I have a 5-day Boost Your Credit Challenge that I'm going to be launching soon, but this is going to be, you guys are going to get the first taste of it. So basically what this is going to be, I'm going to put it all into one day today, but basically what the Boost Your Credit Challenge is a one exercise you can do for 5 days in a row that will boost your credit over the next 30 days. So without further ado, so the first step that you can do to boost your credit, it does not take good credit. It does not, you don't have to qualify for anything, but you can become an authorized user on other people's credit cards. So I've covered this in an earlier, I think last week, we went over this a little bit. All credit cards, if you have a credit card that's in good standing, you can add somebody as what's called an authorized user. Excuse me. So when you add somebody as an authorized user, a couple things happen, a couple things don't happen. One, that person that you add does not have any control over that account. They can't make any decisions on it. They can't make any changes. They can't do anything. You don't have to give them a card. If you don't give them a card, they can't spend anything on the account. So what's the point, right? Well, when you add that person as an authorized user, your whole credit history on that card, if you've had that card for 10 years, that whole 10-year credit history, 10 years of good payments, will automatically be transferred to that person's credit report. And it doesn't show like you added them right now in April of 2022. They get the whole entire 10 years. So that can be a really, really big boost to your credit. It's not the, it's a nice tool. It's a nice boost. It's not the be all end all. It's not going to miraculously make your credit gold and make everyone hand over money. But it can give your credit score a huge boost. You don't have to have good credit to qualify for it. So if you can find somebody, friend, family member, whatever, who has good credit, have them add you. It's a very easy process. They call up their credit card provider. They give your name, address, social security number. That's it. You're added. Within about 4 to 6 weeks, that will now show up on your credit report. If you can find 2 or 3 of these, that would be ideal. Any more than that, there's a point of diminishing returns. So But one is a great help, two is better. After three, it doesn't really matter. But if you can find a couple of them, that would be perfect. Now, it'll take about 4 weeks to show up on your credit report. And depending on what's going on with your credit, if you have zero credit, you can expect to see a huge boost. If you have a whole bunch of negative stuff, the boost may not be as dramatic, but every little bit helps, because the game here is to keep pushing your credit score up. And it's kind of a catch-22 sometimes, because if you have really bad credit, okay, so you need to build good credit, nobody's going to give you credit so you can build it. So it's that catch-22. This is one of those kind of a credit hack that will allow you to get credit on your credit report without having good credit. So the idea is, okay, we get you a certain boost. Now maybe we get you up high enough that you can start adding your own credit. So with the authorized users, you get to absorb the entire history of the card that person puts you on. So like I said, it's not a matter of them trusting you, because you don't have any control over that account. You do have to trust the person adding you as an authorized user, however, because anything they do with that card goes on your credit. If they max it out, your score drops. They have a late payment, your score drops. You take the hit. So you have to be very careful, make sure that somebody who has their finances under control, they're very good and very responsible. And it can be a really cool way to boost your stuff even 20, 30, 50, 70, 100 points, depending on all the other stuff that's going on. It's impossible to predict how many points you're going to get off of it, but it's going to raise your score. So here's a little asterisk, if you don't have a friend or a family member who has good credit or a good credit card and good standing, you can find places that basically credit card brokers, where you can purchase your way onto a credit card, somebody's credit card. There are people who have credit cards available and they list them with brokers. And I'm 50-50 on that, to be honest. That's a tough one, because it usually costs between $500 and $800 for somebody to add you, and they add you for 90 days. So there are a lot of variables going into this. I don't generally recommend paying for somebody unless in your very specific case, you need that particular boost to get certain things. So you can qualify for these things and then you can be removed. It doesn't matter. But that's really kind of on a case-to-case basis. If you got the discretionary income and you can drop, $700, $1,200, whatever, and get added to somebody's card, boost your score, do what you have to do. That's up to you. It's always generally better, I've found, to find the friend or family member, somebody who can add you to it. It doesn't take long. Usually people are willing to help you out, especially when they know nothing can come back on them. So, all right, that is number one. Number two, second thing that you can do to boost your credit is you can make sure that your credit mix is optimal. What I mean by that is the bureaus for optimal scoring like to see a particular mix of credit. And when I say mix of credit, what I mean by that is different types of credit. You've got revolving credit, which is your credit cards. You can just keep using them over and over again, pay them, use them, pay them, use them. And you have installment credit. Installment credits are loans that you pay on for a certain amount of time and they're done. Car loan is a perfect example of this. Usually pay it for 5 years, you're done. So they like to see some of each. So most people have installment credit because most people have an auto loan. If you don't have any installment credit on there and you add some, you're generally going to see a big boost. There's a couple of ways you can go about that. Even if you have bad credit, there are two companies, one called Credit Strong, that's creditstrong.com. The other one is Self-Lender, and they recently changed the website. But if you Google Self-Lender, you'll find it. Basically what those are is you can set up a loan online. You don't have to have good credit because they don't actually give you the money. They give you a loan, but then they hold it in a savings account. So it's much like a secured loan, except you don't have to come money out of pocket. You don't have to put $1,000 or $2,000 up for them to give you a loan for $2,000. You just make the payment arrangements and then start making the payments. They hold the money. When you get done making the payments, then you get the money less the fees. There's interest and those kinds of things. It's not free, but it's kind of like you're paying into a savings plan that you get to take out the savings after a certain amount of time. But the cool thing about both of those, both Credit Strong and Self Lender, is they report to the bureaus as a personal loan. So if you don't have any installment credit, or if you're just looking to add more depth to your credit, those can be a really, really powerful tool, because once again, they don't give you the money, so they don't require any particular credit score or credit qualifications to get this. So, but it will report as you're paying a loan. So you also don't want to mess up those payments, because they will also report you late, just like a regular loan. But you get all the juice of having a personal loan. And with Credit Strong in particular, you can set up, you have a lot of flexibility in the payments and the terms. You can do a $10,000 loan over the period of 5 years, where the payments are like $110 a month or something like that. So that looks really, really strong on your credit report to have like a $10,000 personal loan. You make payment history on that. That looks really, really good. That will build your credit. I've had clients that have added that. That takes a month or two to show up. But once it shows up, you get a really strong credit boost, and that credit keeps boosting over time as you make your payments, and the balance that the reporting goes down. So that can be a really powerful tool, both just to build credit, kind of like getting an authorized user, but also to satisfy the requirements for the correct mix of credit. Okay, so that's installment credit. The other factor that in the mix of credit is revolving credit. That's credit cards. With credit cards, there's a lot of debate over how many credit cards you should have. The one thing that's for sure is it's more than one or two. If you look at FICO high achievers, if you look at those individuals who have 800 or higher FICO scores, on average, they're going to have 7 credit cards. FICO keeps all this data. They can run all these different numbers. So the average FICO high achiever, the average person with 800 or higher credit score, has 7 credit cards. That's not a hard and fast number, but it gives you an idea. I generally recommend to people at least 3 to 5 for optimal scoring. Myself, I've got 9 plus a line of credit. So I basically have 10 revolving credit card accounts. I did that because when I was rebuilding, it takes a long time to get, my personal goal is to get back to 800. So I went from low 400s to just over 800 in 26 months. Made very fast progress at first, and then, but to get, when you start getting in the 7s, you've got to grind it out, because 800 does not come easy. But one of the reasons I added so many over that short period of time was simply because if you just have 1 or 2, you have to keep them for such a long time before you get those really, really premium scores. So I'm not saying go out and add a whole bunch of credit cards right away, because especially if your credit is bad, you're going to be very limited in what type of cards that you can get. If your credit's real bad, you may have to go the secured credit card route, and that's okay. But there are a bunch of starter cards out there, if your credit is pretty shot but just not absolutely horrible, that you can probably get. Some of those are Credit One, Green Dot, Indigo, the Bank of Missouri Fortiva card, First Premier, First Progress. They're all horrible cards. They're really horrible. They have high fees, high interest rates, and 0 benefits. So they're a necessary evil if you have no credit or really bad credit to get back on the board and back in the game. Sometimes you got to go that route. With secured cards, if you want to go that route, a secured card, if you don't know, is where you give a bank or financial institution, say, $500 or $1,000 or $300 or whatever is comfortable for you. And then they issue your credit card with a limit of what you gave them. So you give them deposit $500 into a savings account that you can't touch. they'll give you a credit card for 500. The idea is that, if you run out and max this thing out and don't pay them, they've got the money sitting there. So they're protected, they're safe. You generally don't have to have a great credit score to get a secured card. With your bank, who you bank with is generally a good place to start if you're looking at secured cards. If they don't offer that option, Discover is probably one of the best secured card companies. They have great customer service, well-respected card, and after 6 months of good payment history, they will generally, if you haven't gone over the limit and you make good payments, you're not carrying a high balance and all these other things, they will generally whatever money you deposited, they'll send back to you, turn it into a regular card. Now you have a regular Discover card, which is a good thing. It looks really good on the credit report. So the idea is if you just have 0 credit cards, you need to get some. If you have like 1 or 2, it's probably best to add 1 or 2, depending on where you're at. And then once you've got a couple more credit cards, maybe you've got 3 now, and you've got the installment credit, those 2 things should boost your score. Every single time I added a credit card when I was in my rebuilding process, excuse me, every single time I added a credit card, I saw my score bump up. So the amount that it bumped up lowered every time. When I first added my first card, my score went skyrocketing. And then my second card went up 30, 40 points. Third card, maybe only 20 or whatever. But every single time I added a card for the first 5 or 6 cards, my score went up. So I don't suggest adding, 3, 4 right away, but be strategic about it. Add the credit cards, add your other stuff, do what you can, build your score up. As your score gets higher, you qualify for better and better cards. There are some amazing travel cards out there and things like that, and bonus cards and cashback cards and all that points once you get really premium credit. So you're gonna have to wade through the mud and deal with the junk ones in order to build your credit, get those really high scores. Once you get those really high scores, you can get those really badass credit cards. And then you can start going through and methodically canceling the starter cards, the really bad cards. But the idea with this particular point is to have that mix of credit, the installment and the correct amount of revolving cards. As a quick note with the revolving, I would say almost exclusively with regular cards. If you have 4 cards and one of them is a retail card, like Macy's, Dillard's, Nordstrom's, Home Depot, Staples, Amazon, something like that, that's okay. But what you want to avoid is having a whole bunch of department store cards or a whole bunch of retail cards, because that is frowned upon by lenders. And even if your score is really good, you run the risk of the lender looking at your score and saying, okay, they look good, then looking at your credit profile and not liking what they see on the profile. They can decline you for any reason. So if there are certain stores that you shop at a lot and it's good for you and there's a lot of benefit to you, have a couple retail cards in the mix, but don't get them. A lot of people end up with 10 retail cards because every time they walk into a store, hey, we'll give you 10% off your order with it. You sign up for a credit card, and they end up with TJ Maxx and Kohl's and Victoria's Secrets and Best Buy and blah, blah, blah. Not a good look. Not a good look. Like it or not, creditors frown on people who have a bunch of retail cards, because the people with a bunch of retail cards generally don't have the highest degree of financial literacy, and they tend to get in more problems in the long run than people who use regular credit cards, the Visas, Discovers, MasterCards, and Amexes and things like that. So keep the department store cards, have a good, that's part of the mix too. You got to have probably at least one. Me, I have 2 out of my 10 credit cards. 2 of them, one is a Best Buy, one is Nordstrom's. I shop at both places fairly often, so they benefit me. So but you don't want any more than that. So that's when we're talking mix of credit. We're talking all those things into one. You optimize that, your credit score is going to go up. So number 3, dispute errors, inaccuracies, and negative items on your credit report. This is something that you can do yourself, or you can hire somebody, a company like mine. There are packages for full credit repair and credit restoration in your Auvoria Prime back office. Check those out. They are packaged together with full comprehensive coaching plans to bring you from wherever you're at now to very high credit scores. There are 3-month programs, there are 9-month programs, and whatever fits your budget and your needs, your goals. But getting those negative items off your credit report, that is something that is going to be critical if you want really, really high scores. If you want to get those premium credit cards, you want to get the best financing rates on your cars, you want to get the best mortgages, you're going to have those negative things off. There is no two ways about it. It's just the way it goes. So whether you hire somebody or you do a bunch of research online, do it yourself, get started on that, because it can be a time-consuming process sometimes, depending on how you go about it. With my company, we've shortened it. Typically with traditional credit repair, where you're sending out the dispute letters and blah, blah, you're going to look at 12 to 18 months before you get a decent amount of the stuff off. With the approach that I take on it, we've got that shortened very, very predictably to 2 to 4 months, maybe sometimes even quicker. But 2 to 4 months is generally how, no matter how much stuff you have on your credit report negative, we can generally get it, the majority of it off in that 2 to 4 months. That makes a huge difference, because ultimately, no matter how much good credit you build, if you have that negative stuff on there, think of that as weight that's pulling your credit report down. You're never going to get the really premium scores unless you get rid of that weight. That's just the way. And the flip side is true as well. You can have you can pay a bunch of money and get all the negative stuff removed. If you're not doing the right things to build credit, your score is not even going to go up that much, even with that negative stuff gone. So you've got to have both. You have to have the good credit and you have to get rid of the bad. It's just the way it is. So however you decide to go about that, it's up to you. Me, that's just the way I'm built up. I highly recommend hiring a professional, somebody knows what they're doing, because ultimately you have to figure out what your time is worth. It's a very time-consuming process, and you also have to have a very high degree of knowledge to do it right. For example, I could probably watch YouTube videos and learn how to wire my own house. I'm not going to do that. I'm going to hire an electrician so I know it's done right, and it's done a lot quicker than I can possibly do it. All the information's out there. If you want to dispute stuff, it's all out there. But you hire somebody who knows what they're doing, the results generally come a lot faster, more predictably, and you get a more higher quality of work than if you're just learning the ropes yourself, because there are a lot of different laws out there that affect credit. Those are changing all the time. The way creditors deal with disputes and things like that are changing all the time. So there's a lot of stuff involved with, like any other industry. The biggest problem with the credit industry, honestly, is that most people in the credit industry, they are, well, let's just be honest, they're scumbags, scam artists. And even if they're trying to do the right thing, a lot of them are just amateurs, because there is really no barrier of entry into this industry. You can just be like, hey, I'm a credit repair guy. And even if you have no clue what you're doing. So be very, very careful. If you choose to hire somebody, be very careful on who you choose, because there's also some stuff in the back end of the disputing process that can really screw you up. If it's done wrong, if the bureaus receive multiple disputes on the same account within a certain time frame, or disputing on the same law, then they can flag that account for frivolous disputing, which makes it 100 times harder to get removed. So the last thing you want to do is make a very difficult job that much more difficult. So if you do it yourself, be very careful. If you choose to hire it done, be very careful on who you hire. So, but yeah, you'll need to get those negative items off. Fourth thing, and this is big, credit card utilization is a huge factor in your score. And what I mean by that is, if you have a credit card that's with $1,000 limit, if it reports to the bureaus that you have more than about $250 on there, it's going to start dragging your score down. The higher you go in terms of percentage, in this particular case, if you went from 250 to 500 to 750 to 1,000, the heavier the impact on your scores. So higher utilization, the lower your score. And this can be a little bit tricky too, because it's on individual cards and it's also at your overall utilization. So they'll look at all your credit cards and lines of credit together, total it all up, and then total how much you owe, and look at that total percentage as well. So both of these factor into the algorithm. But to give you an example, a real life example of myself, I got my credit scores up to they were absolutely premium. I maxed out my biggest card. My biggest card was like $20,000 at the time. Maxed it out for business things or stuff I had to get for this business. When that reported to the bureaus that I had, the $20,000 card, I think I had 19,400 some change on there. When that reported to the bureaus, my credit score tanked by over 80 points on each bureau. And although I knew it was going to happen in the industry, I've seen it before, I knew it was going to happen, it still is shocking when you open up your credit app and your scores have tanked by that much. It's hugely disheartening. Now, the good thing with utilization is that it is 100% a snapshot in time. So whatever reports to the bureaus, the credit cards report one time a month. Whatever reports on that day, you're stuck with for the next 30 days. So if you've got a couple of maxed out cards, your score can take a drop. You pay them off. 30 days later, it reports that they're paid off. Your score just rebounds right to wherever it should be. There's no residual negative consequences to this. It's a snapshot in time. So that's a good thing. It's temporary. It still sucks. But ideally, you want to pay off your cards in full every single month. Do not do that whole, I got to leave a balance on there to build my credit. You don't. That's some BS myth that I suspect was started by the bank so that people would carry a balance and pay them more interest, because that is absolutely untrue. You do not have to carry a balance to build your credit score. You do have to use your credit cards to build your score, but you can use them, pay them off, use them, pay them off in full, use them, pay them off in full. And that does a couple things. One, it builds your credit. Two, it shows the credit card issuer that you can handle higher amounts. So, say you have $1,000 card and you spend 900 on it, then you pay it off in full. And then a week later, you spend 800 and you pay it off in full. And then you spend 900. When I got my first credit card, I was paying it off 4, 5, 6 times a month. It was a $500 card, so it didn't take much, but I would just come close to maxing out. Never went over the limit, never go over the limit. Jump on the app, pay it off, wash, rinse, repeat. But doing it that way is going to demonstrate to the creditors that you can handle a higher amount, because ultimately they're trying to find that sweet spot where you can't pay it off in full. It's too much for you, but you can still make the payments, because then it sits there, the balance sits there, and they get to make an enormous amount of interest on it. So if you're paying it off in full every month or multiple times a month, chances are very, very good that if everything else is good on your credit, they're going to steadily and consistently increase your credit limit, which is going to help, because then you can spend more without it affecting your utilization and thereby your score. So credit card utilization. If you have high utilization, you've got a bunch of cards that are maxed out, pay them off. Sometimes I realize it's not financially possible to pay them all off right now. But if you work on that, if you make a couple big payments, anything you put toward them is going to raise your score. It's also going to save you from paying that horrendous interest rate that every single credit card has. So it's a good idea anyway. But if you're in a situation where you've either run into some financial trouble and had to put a bunch on your credit cards, or you just didn't really pay attention, you got a bunch on there, pay it off as quick as you can. The sooner you pay it off, the higher your score will go up. So number 5, and this kind of goes hand in hand with the last couple things we talked about. You can request the banks or whoever issued your credit card to increase your credit limit. You don't have to wait for them to do it arbitrarily. You can request a credit limit increase. Now, if you have existing credit cards, your payment history is going to have to be good on those cards. Like say you had a Amex card, 3 years. your limit's still $1,000 for whatever reason. Okay, well, look at your payment history. If your payment history is good, no 30 days late, you're going to be spot on. For this, you probably don't even want to be paid after the due date, because they want to see that you're paying on or before the due date. But that's different than what reports to the credit. Late payment only reports to the credit if it's 30 days or more. But internally, with the credit card companies, if you pay 1 day past, they're going to recognize that it was paid late. They're also probably going to assess you a late fee. So always, if possible, pay your credit cards ahead of the due date, ahead of the statement date. This will show that you're responsible making payments. You also want to make sure it's paid off or very low utilization at the time you request a credit limit increase. And the rest of your credit's going to have to be good too. It's not, you can't, have 500 credit and call up your $1,000 Amex card and ask them to increase it, because they're going to take a look at your credit to make sure that you're in good standing. So your score is going to have to qualify for this, but that's a great way. If you can get your credit limits increased, like say you had a $1,000 card and you had $400 on it. Well, that's 40% utilized. That's hitting your credit. That's hitting your score fairly significantly. You get them to increase that from 1,000 to 4,000. Well, now you haven't made a single payment on there, but your utilization is only 10% instead of 40%. 10% is really not affecting your score. It's really when you go above that 25, 30, it's actually around 28.9, but we'll just call it 25 to err on the side of safety. But if you boost them up to $4,000 in this hypothetical situation, well, now you're only at 10% utilization. Your credit score is going to go up, and it's going to improve the look of your credit profile, because once again, bear in mind, there's score, credit score, and credit profile. Credit score is the filter that they run you through, the very first filter. So if they run you through that and you're like, okay, scores are good enough, they qualify for this loan or this card or whatever, then they take a look at your credit profile. And that can also make or break you. To give a personal example again, I applied for a Chase business card for my credit business. And at the time I didn't have enough business credit to qualify the card, so I had to apply with my personal and guarantee that business card with my personal social. But they ran it, it was fine. Boom, business card, $37,000 limit, perfect. But it generated 2 inquiries. There were 2 inquiries on my credit report from that. Now, I don't go around applying for credit a lot. It's very, very seldom I do this. So I had 2 inquiries on my credit report from that. Since I was applying anyway, I was like, you know what? I think there's a Bank of America card and a Citi airline, it was American Airlines branded Citi card, that I was both interested in adding to my credit card portfolio. So I was like, you know what? I'm going to apply for these 2. So there's a technique that you could use when applying for multiple cards at one time that helps you assure that, give you a better chance of qualifying for it. So how that works is, in this case, I had Citi card, and B of A, and I filled out the whole application for each of them in 2 separate tabs on my computer. And then whenever the application was fully complete, I hit submit on the first one, clicked right over and hit submit in the second one. That way they don't see that you're applying for another card at the same time. And you have to do it quick though, because these inquiries show up in your credit so fast these days. And if they see that you have inquiries, they can disqualify for that, which is exactly what happened to me. Both Bank of America and Citi card denied me immediately. And not to be, completely arrogant asshole, but I'm not used to getting turned down for credit cards. My score at the time was, depending on what bureau you looked at, about 810 on each of the bureaus. It was over 800 on every single one. And I have a great income and everything else. So getting denied was not what I expected, but that's exactly what happened, because it's not a person looking at it. That's the first thing I understand. When you submit a credit card application, it runs it through a computer algorithm and gives you an acceptance or a denial based on that computer algorithm. So it kicked me back. And the reason that I was denied on both cards was too many inquiries in the last 12 months. Remember, I had 2 from the Chase card, but they were recent. But both Citi and B of A denied me those cards because in their mind, I had too many inquiries. So that's the difference between credit profile and credit scores. My score was fine, way more than qualified. But when they scan the profile, they look for other different things in the profile. Now, those 2 inquiries got me declined. Now, here's a real side note to this. When you're applying for a credit card, every single credit card, well, not everyone, most credit card companies are going to have what's called a reconsideration line. A reconsideration line lets you call up and say, hey, like I did with both Citi and B of A, and this is very much a tale of 2 cities, because when I called B of A, I called them up, called the reconsideration line, or called them up, asked for the reconsideration line. They gave me the credit card reconsideration line. I talked to a human being in Florida, and I said, hey, I gave my, okay, I'll take a look at it. Pulled my credit report that was in the system, looked at it and said, yes, you're absolutely right. Your scores are perfect, income's perfect, utilization, everything's great. You had those 2 inquiries, just like you said last month. He's like, so I don't see any reason why we can't approve this. Wrote it off. I was approved right there. With Citi, it was a completely different story. This is why I don't really care to do much business with Citibank, because they don't have a real dedicated sort of reconsideration line or reconsideration department. I kept getting funneled to somebody, some kid in a cubicle in the Philippines or India or wherever it was, who had no authority to do anything, did not know the answers to any of my questions, and was basically reading off a script when I was trying to plead my case. I'm like, look, I had two inquiries. I would just get, well, you have too many inquiries in the last 12 months. I'm like, well, how much is too much? Take a look at the file. You tell me I'm not qualified for this card. You have too many inquiries. Like there was just no getting through to anybody who had any decision-making powers or had a real strong command of the English language. So it was frustrating. I basically let that go. Won't be applying for a Citi card anytime soon, but Bank of America has my business because they actually had a person take a look at it. Either way, I'm getting off on tangent here, but the limits on your cards, the same thing can be when you request a higher limit on your card. If you get denied, you can call the reconsideration line for that as well. And then you'll talk to a human being who will actually look at the situation as a whole instead of it just being accepted or denied by some computer algorithm. So keep that in mind. So that's another way to kind of increase your score right off the bat. And that happens quick. They report that credit limit increase to the credit report. Next time it reports a balance. Even if you hadn't paid it down, your utilization's gone down, your score goes up. So that is the fifth and final booster part of the Booster Credit Challenge, which I'm going to be releasing, as a sort of just a free training type thing. But yeah, that if you do those 5 things, you can radically change your score in the matter of even 30 days. I see this all the time because I use very, very similar formula to this in the coaching. It's a little bit more personalized. And the stuff I gave you is just general stuff. Obviously, with our clients, we get a very, very personal approach. But combined with us getting, generally speaking, and if we get the results we typically get, we get a bunch of stuff off in the first 2 to 4 weeks. So if you get a bunch of that stuff off and you intentionally and specifically add the right type of credit, that takes 2 to 4 weeks to report, in 30 days, you can change your score radically. Now, obviously, with us, we don't stop there. We got the 3-month coaching programs, and we get the 9-month coaching programs. But the credit repair process remains the same. Generally speaking, we get a lot of results in the first 2 to 4 weeks. Then we have a very specific escalation process. And usually people are pretty much cleaned up within that 2 to 4 months. So you can quite literally be changed in 90 days or less. You make huge changes in 30 days, but in 90 days, for example, the normal credit score, minimum credit score to qualify for a house. And I say generally speaking, because there are some loan programs that will go a little bit lower, but generally speaking, to qualify for a mortgage loan, it's 620. I have rarely found anybody in years that I have not been able to bring from wherever they're at. I don't care if it's 390, 410, 400s, whatever, to 620 or above in 90 days or less. It just doesn't happen. If that person follows the coaching and follows the blueprint that we give them to build their credit, and we get the results that we typically do, it's game over. Your score will go up. So it's never, the game is much longer term now. We're all playing a long game with credit, but getting that immediate results always feels good. And that immediate gratification, because you got to rack up the small wins. That keeps your head in it, keeps you excited, it keeps you going. And we can see those big changes and get to somewhere that's halfway respectable in a very short amount of time. That makes you feel a lot better about yourself. It makes things a lot easier. Adding new trade lines, adding credit, different things, it makes it a lot easier. And then as you continue along that credit building journey, it gets harder and harder to get those increases because, like it or not, there's a lot of different factors into getting a very, very premium credit score. And I'm talking 800 or above. Time is one of those things. Average age of accounts. The length of your credit history. Now, these are not going to hold you back in a huge, huge, huge way. Like when I got wiped out, I had to clean my credit report completely. So suddenly I was in my 40s and had no credit history whatsoever. So when I started building, it was 26 months when I went from low 400s to just over 800. And so my entire credit history at that point was 26 months. And my average age of accounts was probably around 12 months. But I had added a decent amount. I've added a car loan, added a personal loan, added a checking line of credit, added credit cards. So I had built the base, a very wide base of credit very quickly. And then as the years back up, you get credit for each one of those. Now, you don't want to just go out there and haphazardly add this and add this and add this. You want to be very intentional about how you build. But a lot of that is going to be dependent on where you're at too, where your starting point is. There's a lot of different variables with that. Everybody's got a different story. Everybody's got a different place that they're starting. So it's tough to say exactly. But if you follow these things, you can make some very big changes even in the next 30 days. And if you are looking to get some help with getting negative stuff off the credit, check out the different packages they have in the back office here. There's probably one that'll fit you, whether you're a single person or a couple. We have discounts for couples, do joint coaching and things like that. We've got 3-month programs, we've got 9-month programs. So there'll be something that'll fit your budget. And understand that this isn't an investment in your future, because the amount of money that you're spending on interest and other things, if you have bad credit, is absolutely staggering. You start looking at the actual dollars and cents, you're pissing away an entirely too much amount of money, entirely too large amount of money. So you got that. If your personal credit is good and you're a small business owner, we also have business credit building packages where those business credit can be built 100% on the EIN number, and that's completely and legally separated from your social security number. That's a huge, huge thing, because if something happens to your business and it goes out of business and whatever happens, your business credit can be dragged down and crashed, but your personal credit can remain intact. And coming from personal experience, that's big, because when I got wiped out in 08, 09, I thought I was building business credit, but I had no freaking clue what I was doing. And it turns out I was kind of building business credit, but it was all personally guaranteed by my social security, my personal credit. So when everything went belly up, my personal credit got destroyed. So business credit, if you are a small business owner, especially cash heavy businesses, if you have materials, like you're in the trades, construction, whatever, and you have materials that you need to purchase, or if you have a lot of employees and you have to make payroll, or if you're waiting to get paid from certain jobs or things like that, and you need that cash to carry your orders while you're waiting to get paid, this is a fantastic use of business credit, because you can set up lines of credit and credit cards and loans that are much, much, much larger than if you were just trying to get business loans using your personal credit. So ideally, you got to have both, but everybody needs their personal credit to be good. So take a look at those packages. If you're a small business owner, take a look at the business packages, and we will see you next week. Not even exactly sure what we're talking about next week, but it'll be something good, I promise you. So appreciate you. If you have any questions, I believe you can contact me in the back office as well. I don't know. I'm gonna have to get some clarity on how that works, but reach out to me if you want. You can text me. My phone number is 602-486-7711. That's 602-486-7711. Feel free to text me. Let me know who you are and what you're looking for. And as far as I remember talking about, one of the first things you need to do is pull your credit, check and see where you're at. You can get a credit report for $1 at 365creditmonitoring.com. That's 365creditmonitoring.com. It'll cost $1. You get a 7-day trial period for that $1, and you get all 3 bureaus, FICO 8 scores, and account details, everything you need to know, everything you need to see exactly where you're at and what needs to be done and what you're dealing with. So if you need any help with my credit journey, let me know. Otherwise, I hope you guys have a fantastic Tuesday evening. See you soon.